Good morning. This is Carl Dakin, and this is the Successful Funding Show. Today is January the 7th. This is the new year for most of us who had to work through or struggle through the holidays. It's good to be back and back in a regular routine where we can go more than 2 days without hitting a holiday or a weekend day. So, for those of you not familiar with this show, it's all about funding. Uh, Ordinarily, we would have a guest on the show where we would talk about a particular topic of funding. But due to the holidays and all the other things that are out there, we do not have a guest this morning. But I see that we do have a number of people in the audience, and I welcome you to join in or ask comments and questions as we go along. I will do a shout out to Omar. Good morning, Omar. Glad to see that you're listening in this morning. And also to Zach Dane. Also, good morning. Happy to have you with us. So what I'm going to be doing today in what amounts to be a monologue, other than interacting with any comments or questions from our audience, is I'm going to go back to the topic that we had on the table for last week on New Year's Eve when we did a demonstration of my AI avatar Cap as to how it could serve as a tool in the toolbox for people who are entrepreneurs, people like myself, who are consultants, and help people with different things. But we were going to talk more about the top 10 challenges to funding. So that topic is back on the table today, and we're going to walk through it pretty quickly. I'm going to go through the list of the top 10 and then spend a little bit of time talking about each of them, trying to give a better explanation of what the problem is and how you might respond to that. And the idea here is I'm trying to share my knowledge on raising funding to help you in 2025 in any funding campaign that you may want to take on. And keep in mind that when I use the word funding, I want to use it in its widest possible scope. So I'm not just talking about an incident or an event where somebody writes you a check, where you get cash in exchange for sale of an investment. I use the term funding to mean anything that brings anything in the door that is a resource. So I might be talking about investment, but more importantly, I like to talk about the sale of products and services, things which are in the ordinary course of operating your business and something over which you should be the expert over anyone else in the world. I'm also talking about other types of money coming in the door. These may be in the form of gifts or other types of money coming in that has no requirement that you pay it back. So we talk about anything that brings a resource in the door. I'm also talking about any kind of resource. It's a common, I will say, thought that when we talk about raising resources, doing a capital campaign, that all we talk about is cash. But in fact, everyone has an opportunity to get other resources they need to start and grow their business. These resources come in all the forms of anything you would spend money on. So if you need somebody to be on your team and you need some help, some human resources, that's something you would pay money for. But if that person is willing to work for a below market rate, taking equity or deferred compensation in some kind, then that is a form of investment because you've talk this person into making an investment in your operation, in your organization, and you've deferred the need for you to have cash in hand today. So if we use the broadest possible definition of investment, it's any resource that comes in the door and anything that allows you to wait till later to write a check for something to someone for one of the resources that you use in the operation of your business. So using this big definition, it gives us more flexibility. We don't get caught up, as a lot of entrepreneurs do, where they're saying, I can't start my business because I don't have cash. And to get cash, I have to go to an angel investor, a wealthy person who may not find my business appealing, may not find my offer of investment to be attractive. And even if they do like me and like what I'm doing, they still may choose somebody else. Like a game of musical chairs, when they make a decision and the music stops, there'll be one person that they select, in this case, who's still standing to get their money, and everybody who sat down is out for this particular funding round. So there are so many things to take into consideration. So what I've tried to do, working with a number of people over the last year and a half, is to come up with this top 10 list of challenges to funding. These are the issues as I see them, which may also get you to a point where you cannot raise funding. So we'll go through those. But before we start, and Zach, thank you for your question. I'm going to throw it up here on the screen. So Zach asked the question, can you give away too much of your company up front trying to trade for sweat equity? And for those of you in the audience who may not be familiar with the term sweat equity, this is an example, as I mentioned earlier, where you can get a person to take less than their market rate of their pay, and you give them up stock, or you give them up some other form of deferred compensation. It could be warrants or stock options that they can trade in later. And the question is, can you give up too much? The answer is yes, you can. It happens all the time. And the bigger problem that occurs that leads to this situation is that there has been a failure to specify exactly what a person has to do to earn their money. If you approach this person that you're negotiating with as though they're going on salary, and you're both making assumptions that the person is going to work hard, they're going to earn their keep, that they are going to do everything that they need to do, and they're going to do it to a level of intensity and quality that has not been discussed, invariably you'll be surprised, and quite often you'll be disappointed, because there has been no, as we lawyers say, there's been no meeting of the minds. There has been no specification from a technical standpoint as to what they're going to do in order to earn what it is that you're going to pay them. And I prefer, and when we talk about doing this, where somebody is going to take deferred compensation, actually step back, regardless of whether they're making an investment, even if all they're doing is working for a salary, and even if this is the lowest paid person in your organization, you should have an agreement that spells out what you expect the person to do. And it should be more than a job position. So when you talk about somebody being a janitor, what does a janitor do? Well, a lot of people are going to try to assign a definition to that. But if they use one definition and you use a different definition, then we have a problem. They may decide that they don't want to carry out the trash, or they don't want to mop the floors, or they don't want to clean up after somebody that got sick, or any number of other things that might occur within an office space, within a factory or a place of business. And so you need to tie that down. So if you can spell out to high detail, and again, there are two levels of detail. One is a description of the activity, but the more important one is the one dealing with the metric for performance. So in that regard, you do not want to simply say, I want you to clean the place up. You need to say, I would like for you to vacuum the floors once a week. I would like for you to mop the bathrooms once a week. I want you to use these kinds of products and lay it out to a level of detail where there is no possibility of a misunderstanding, an ability for somebody to go, I didn't get what you said. It has to be at that detail. Now, as important as this may sound, or unimportant as it may sound for a janitor, you need to do this for your executives. You need to do it not just for the officers of your company, but also for your board of directors or your board of managers, and for any of your advisors. I quite often recommend to all my clients that they recruit a board of advisors. And in a startup, there's typically not very much money that can be had to pay these people an appropriate fee for the time that they invest in your company. But you still need to spell out what you expect them to do. Putting them on a board of advisors with no guidance, no instruction, no requirements, no written agreement means that they can do whatever they want and they've fulfilled the terms of that agreement, because there is no definition of what constitutes standard practices or standard performance for a board advisor. When I do a board advisory agreement, I will spell it out and say, I expect you to put in 2 hours per month providing advice as needed, when needed, upon call from me as the head of the company. Oh, by the way, I want you to announce that you're on the board of advisors. So I want you to issue a joint press release with me that you've agreed to be on my board of advisors. This is a press branding type of activity. Then I like for you as an advisor to write 2, 4, or 6 articles for social media to be posted each year under the banner of my company. And I expect that we will hold at least one annual meeting, retreat, or Zoom type of webinar that you will attend. And it's required that you do all these things in order to meet the requirements of what I'm talking about as being an advisor to this group. And if you do all those things, then I try to come up with an appropriate level of compensation. This may be deferred equity, it may be an option or warrant to buy stock, it may be a participation in the revenue from a project. But I will try to come up with something that fairly matches the value of the contribution by that advisor. Well, that's an advisor. Then we go to a board of directors. How many of you have experienced situations where the director didn't show up for a meeting, couldn't be bothered to show up to an organization where they technically are the leadership to set the guidance strategy and often engage in the operations of the business? That just doesn't work. You've got to have something that, again, spells out in writing and is agreed upon, where both sides have reviewed the agreement, and there's enough detail and metrics that you can say they did or did not perform. And more importantly, as we say in the legal industry, a judge or a jury can agree or disagree on whether they performed or didn't perform. It shouldn't be so vague where somebody has to fill in the blank or somebody has to guess as to whether somebody performed fully or partially on any given obligation within the relationship. So if you spell all this out and then you put in a reward that is appropriate based upon the market rate of the individual, then you're okay. Now, when I say market rate, what I do when I'm interviewing somebody is I determine what they would have earned in the market if they were being paid a regular compensation package by anyone, whether it's the government, another private sector, or a charitable organization. If I'm not going to pay them that same level, then I determine what the difference is, the delta between what market rate is and what I'm going to pay them. And this constitutes their investment in my company. Now, at that point in time, then I have to come up with a reasonable reward, just like I would for any investor who puts any cash into my company. In this case, it's an in-kind contribution of time, but I will measure that based upon how how much they have invested. Now, I might be willing to pay them more in the same sense that they have to get a return on their investment that any investor would expect to put in. But I don't want to give away the farm. If I don't want to hire somebody as a CEO or a CFO, say, I hope that you work well during the year. I hope that you do what you're supposed to do. And I hope things turn out well for both of us. And here's 25% of the company. Because at that point, they've been given compensation for work that has not yet been performed to a standard that has not been specified. And by definition, they probably are going to be overcompensated. So to your question, Zach, it is easy. It's done quite often to overcompensate somebody, particularly in a startup where you get 3-4 people together and you say, we're each going to get equal amounts. But unless you've previously detailed what everybody's going to do, unless you've previously determined what the market rate is of the value of the services they will perform, and these are spelled out in writing, all too often, yes, there's going to be a problem. And there's much of a problem with somebody being overpaid as there is somebody being underpaid. I have been in a number of projects where I find out I'm doing all the heavy lifting. I'm the one who's making sales calls. I'm helping write the business plan. I'm out raising funding, and I'm helping with the operations of a business. And I turn around, and the rest of the team is kind of sitting on their chairs and not getting the job done. So look at it both ways. Make sure you've got it in high detail. Make sure that you have a common vision that has been reduced to a degree of precision that there is no doubt about what needs to be done. And from there, you can start making reasonable negotiations on what would be fair compensation based upon where the company is going to go. If we get into that part of it, projecting where the company's going to go, that could take up the rest of the hour. So we'll set that aside for the moment, but happy to take the question. If anybody else has any questions, please join in. So as I said today, what I'm going to walk through the top 10 challenges to raising funding. And I'm going to go through these quickly here, and then we can stop on any one or take questions any one of these and see where they go to. So in challenge number 1 is a lack of awareness. And this is a statement to an entrepreneur that you don't know what you don't know. Altogether, too often, somebody starts a business and they have no prior experience in running a business, or they have no prior experience in the industry in which they're going to, and almost always they have no prior experience with the product or service that they're going to sell to a customer with whom they have no experience. All this lack of knowledge is going to surface a number of issues that will have to be dealt with in the operation of a company. And they can range from very small nuisance type problems to ones that kill off the organization. So that's challenge number 1, is you have to deal with what you don't know. And there are several mechanisms for doing that, which will be dealt with in my upcoming book and webinar on this topic. But for the moment, we'll move through the list. The second is a limited understanding of yourself. And by this, I say you don't know yourself well enough to determine what investors will be interested in you. All too often, I'll talk to an entrepreneur and I say, what do you do? And they give me a very vague, ambiguous answer. And so when I say, well, who would invest in you? I get an equally vague and ambiguous answer, or no answer at all. It's very important when you're out looking for investor candidates to match yourself with the investor candidate. I refer to this as finding your funding soulmate, where there is a unique relationship that's potential between a organization and an investor, because they both need each other in order for each of them to succeed in attaining their own individual goals. But if you don't know who you are, then it's going to be very difficult to figure out who the other person should be, who's the investor candidate. The third challenge is insufficient trust. And this is that you fail to convey a sense of credibility, a sense of trustworthiness to your investors. And it isn't that you aren't trustworthy, but you're not communicating that. You're not manifesting that in a way where it makes it very easy for an investor candidate to look at you and go, that's a solid person. They will perform on their commitment. They won't be distracted by the next shiny object. They are going to work through my investment as best they can to make my investment a success and pay me back a return on my investment. There are lots of things you can do to build credibility, that put yourself out there where people can see you, know you, have an understanding of how you work, how you think, who you associate with, how you work with and through your community. These are all things that contribute to a reputation, a brand of trust that is absolutely essential for every investment transaction. The fourth one is what I call investor misalignment. This is failing to prioritize those investors who are most likely to invest. By this, there's 8.1 billion people on the planet, and you have to ask yourself, how many of these people would invest in your particular investment opportunity? It's only going to be a handful, for the reasons that they have to trust you, they have to have money ready and willing to invest, and they have to choose you over everybody else. If you are talking to people who will never invest, then you're simply wasting your time and your money in your capital campaign, and you will not get any results. You will fail in your campaign. So trying to determine who you should talk to, who is most likely to invest, why they're interested in investing, and emphasizing and amplifying the reasons for them to invest are the keys to a successful investment campaign. Challenge number 5 has to do with lack of differentiation. As I said earlier, the 3 things that an investor has to do is they have to trust you, they have to have the ability to invest, and they have to choose you over all the other choices that they may have. And in this regard, quite often, what a small business, an entrepreneur, or even a community project, they put themselves out there and say, hey, invest in me. And there isn't anything necessarily wrong with them, but they don't look any better than anyone else who is also looking for funding. So at that point, the action of looking for funding becomes a competitive foot race, where you need to stand out, you need to differentiate yourself, you have to make yourself the best choice or the preferred choice of the investor candidates that you're talking to. Otherwise, they choose somebody else. And in this case, they aren't going to be investing in a whole bunch of businesses. They're typically going to invest in one, and everybody else is like in the game of musical chairs. They're all going to be sitting down with no funding. And so you want to figure out how you're the one that the investor picks. And there are a lot of different things you can do to make yourself a better choice, a more visible choice, a superior choice in that selection decision process. Challenge number 6, inadequate preparation. By this, I mean that you're not ready to go out and raise capital. Some quick, easy examples of that are that most of the capital raises require that you provide books and records, a statement of profits and net worth for the last 1, 2, or 3 years, so that the investor candidate can get a look at you, where you've been, and from that draw upon their own opinion as to where you may go in the future. In most regulated investment campaigns, which include Regulation CF and other types of forms, this is mandatory information that has to be disclosed to all investor candidates, or you're going to be in violation of the law and the rules governing that particular type of a raise. And yet, when somebody says, "Oh, I need to go raise funding," I often ask, I said, "What's the status of your books and records? Can you give me a P&L net worth statement that's up to date?" And by up to date, I mean through the end of last month or through the end of last quarter. I'm not talking about through the end of last year, unless, of course, today we're just only a few days into the year, where the end of last year is good enough. But there are so many things that a business needs to tell its story, to give that comfort, that level of credibility to the investor, to build that trust, and to explain how they're going to use the investment money going forward. And quite often there is little or no information. The business comes across like a professional beggar with their hand out saying, "Give me money." And all they offer in return is, I'm gonna make you rich. I'm gonna make more money than what you gave me, with no explanation, no ability to give the investor an independent capability of assessing how and why and the probability of success of that particular organization. And so without this information, you can't get started. So I quite often, ask people who come to me and say, I want to do a funding campaign, and I'll have a list of things I need from them that includes their business plan. I will ask them for a cash flow projection, which is a future forecast of where they think the business is going to go. I would need to know the ownership of the company, who owns what within the company, all the company documents, which would be the articles, bylaws, minutes of meetings, things of that nature. And all these things are a necessary starting point for designing and crafting a campaign to go out and raise funding. If I don't have those, then in essence, I have to send the client back home for the homework to put all this together. And I have seen situations where it's taken over 6 months because the books and records were in disarray. They weren't kept up. There are things that somebody had done a deal with somebody, but it hadn't been written down, and it impacted something, or they gave out a stock warrant which hadn't been exercised and hadn't been recorded correctly. And so all this work is in front of or before going forward with a capital campaign. And so for that reason, when it's say that you're not ready to raise capital, that's what we're talking about. I see we have another guest here this morning, Musamba from East Africa. Welcome to the show today. Thank you for joining in. We're talking about funding, and I'm going through my top 10 challenges to funding today that should guide everyone who plans to raise funding in 2025. They need to check each of these boxes, make sure that they've dealt with all these issues to the best they can. There is no perfection in the funding world, but any risk, any task that could be avoided that would cause an issue or disrupt your capital campaign, it's your responsibility as the leader of your organization to address that and take care of it, so that one, the campaign can be successful, and two, it doesn't create more problems than you're trying to solve by getting new resources in the door. Challenge number 7, resource constraints. You lack the necessary resources to execute a successful funding campaign. So quite commonly, I will ask a person when they come to me and say, I need to go raise funding. And one of my first questions will be, what's your budget? And by budget, I mean, how much time and how much money do you have in your hands today, or which you can allocate during the course of the capital campaign to do all the tasks that a capital campaign will require? It's not magic. I joke sometimes that people come to me and they say, I need money yesterday. I have no money for the campaign, but somehow, some way, I, as the capital coach, am supposed to translate a lack of resources, a lack of planning, a lack of readiness into instant funding. And instant funding can occur, but it only occurs if one's prepared and working through a whole series of activities on a continuous basis to place themselves in a position where investors know of them, trust them, and it's easy to talk to them about whatever resources are needed, and to justify to that investor candidate why they not only should invest, but they must invest in their own self-interest. If you cannot tell that story quickly and easily, if you don't have your data together, if you don't have the time to tell the story, you don't have the money to put together your promotional materials, then you're pretty much painted yourself in a corner. You have left yourself in a position where raising funding is almost impossible. And getting somebody to throw you a Hail Mary pass, a bridge loan, or some other short-term funding arrangement to go out and raise money can happen, but even that requires some work and preparation to do it correctly with a reasonable degree that you'll be successful. So we go to challenge number 8, lack of visibility. This is know your investor candidates, the ones you really want to talk to, the ones who are most likely to invest in your business, in your project. They may not know you exist. If I were to look at your LinkedIn profile and look at your followers or your Facebook friends or some of your social media, I can generally get an idea of how many people you know, how many people you're communicating with, and how many that you communicate with at a level where you can influence them to some extent into making an investment. But the bigger question is that most people don't know you exist. I right now have, I think, somewhere close to 5,000 different people who are following me on LinkedIn. I have about 1,300 people who are subscribing to my daily newsletter, Instant Funding, and another 500 who are subscribing to my weekly. So you might say, well, you know, every day that I publish my newsletter, I'm getting out to about 1,500, 1,600 people. Well, that's pretty good, but that still may not be good enough for me to raise money for a particular project. My long-term goal is to get over 10,000 people who I'm interacting with at some significant degree, so that I have a higher probability that someone within that group will match up with a particular campaign of myself or a client, and they will make an investment. But to assume that any group of 1,000 people contains an investor is a bad probability. If you look at the statistics for angel investing by wealthy individuals, in any particular pitch, less than 2% of them get funded. When you look at the stats for the number of angel investors who invested in a private offering last year, it was less than 500,000 people. Roughly the same number of people who made investments through Regulation CF crowdfunding. So if you're looking for funding and all the people in the world who are actively making investments in your kind of high-risk startup small business is only 500,000 people, Well, at least you could start building your brand so those people can see you. And how would they see you? When would they see you? If it's in a pitch competition, you're a little too late. Um, so you've got to work on that continuously to make yourself somebody that people see, they know about. You want to build that trust relationship in advance of asking for funding, not at the moment of asking for funding, because it's hard to do quickly. Commonly, it takes 3 to 6 months of working with someone to get to a high level of trust. And to do that suddenly overnight isn't likely to happen. Then we get to challenge number 9, targeting the wrong investors. This is what I refer to as you're pitching to investors who are never going to invest. And this is probably the most common error of every funding campaign I've ever worked with. You will see a very generic offering. I'm going to give up 20% of my company for $500,000 or $1 million. And you're like, okay, fine. That may be a reasonable offer for the company based on its value, where it's going to go, all those kinds of things. But not everybody's going to want to invest in your company. Not every wealthy individual is going to invest. As I just described, there's only about 500,000 angel investors who are actively investing within the United States. Are you talking to them, or are you talking to someone who's never going to invest? If you're doing a real estate deal, are you pitching it to an oil and gas investor, or to an environmental investor, or an impact investor? This talking to the wrong person, every time you do that, you're just throwing away a limited portion of your existing budget and time of money to go out and raise funding. And sooner or later, that bucket of money is going to be used up. It's going to be consumed in your campaign. And if you haven't found your investors by the time the bucket is empty, then you're out of luck. You're not going to raise any funding because you have no more resources you can commit to your capital campaign. So back to challenge number 4, which is investor misalignment. You need to know who's most likely to invest in your campaign. You need to know why they are interested in investing in your campaign. And it almost always will not be about you or about what you're doing. It's going to be about them and how your success is going to contribute to their success. And if you are not an ingredient in their recipe for success, it's hard to believe that there would be any reason why anybody would invest in you at all. And so if you're pitching to people where you look like everybody else, they don't know you and they don't understand you, and they have so many other choices with, they've checked the box. They know the people, they trust them, they understand the underlying technology. Why would they choose you over someone else? They won't. And that brings us up to number 10, which is a weak investor network. Simply, you do not have enough trusted relationships that you can look to for your investors in your capital campaign. Back to you start off with people don't know you at all, which makes up almost everybody on the planet. And if you work hard, you will start building relationships with people. These people will fall into 2 groups: those who will never invest because they don't have money, they have other choices, other preferences, so they're never going to invest in you. And you should be working on those investor candidates, building relationships of trust, and making yourself visible to them in a way that builds that credibility, builds that trust all the time. It's a constant thing. I kind of joke when people say, well, how do I build a good investor network? I say, get out your time machine, go back 10 years, and then intentionally every day do something with the goal of meeting someone who could be an investor in your business in the future. And once you know who is most likely to invest and why they're going to invest, then you can target those people through everything you do, from your press releases, social media posts, public appearances, newsletters, speaking as a guest, or being otherwise on a panel at a conference or industry trade show, something like that. So anyway, this gets us through our top 10 list of challenges for people raising funding. And I invite anyone in the audience who would like to drill down on one of these top 10 challenges to do so. And we can get into an explanation of how that's going to work. It's very important as an entrepreneur, as a leader of an organization of any size who's going to go out and raise funding, to recognize that you're not entitled to money, that the fact you need money does not translate into receiving money, that you have so many different people that you're competing with to get funding, that you have to position yourself in a relationship. You have to do it at the highest level of trust that you can establish. You have to make yourself a valuable contributor to the investors' goals and outcomes, so that they consider you an asset to them, and not simply somebody looking for money. There are lots of people out there. I get deals every day hitting my desk saying, hey, I need $500,000, write me a check. I don't know who they are. I've never met them before. I don't have $500,000 to invest in them. And because of the fact I don't know them and am not familiar with the pros and cons of their particular deal, because I haven't reviewed any of their materials, I'm not going to pass them along or introduce them to somebody who does have money, because just the fact that somebody has money doesn't mean they match up or pair up with this particular opportunity. I want that opportunity to be mutually beneficial to both the investor and the organization. And all too often, they're not a match. And that's where we go from there. So Zach asked another question here. What are easy resources? Sorry, I just started laughing at the word easy, because raising money is hard. It's not, I will say, it's not that you can't do it, but it requires work, and it requires some thought and focus and strategy and planning in order to do it correctly. When people tell me that they're going to raise money, the first thing I do is I say, who's on your team? And they'll tell me that they may be a solo entrepreneur. Maybe they have one or two or three officers. There's an inventor, technical person, and a salesperson. And then I said, well, who's on the board? And they may have a cousin, nephew, niece on the board who has no knowledge of running a business, has no network or anything, and they have no advisory board. And so starting with that, the easiest way is to recruit people onto your team is to set up an advisory board. These are people that you may know. If you don't, you should go out and find them, who represent a bucket of knowledge that you may want to dip into from time to time in going through the operation of your business. I have no trouble with a board of advisors as large as 20 people, where there's not a single bucket of knowledge missing that's not immediately available to me. If I have a question, I want an introduction, I want to understand something, and I want these people to support me officially, formally, by announcing to everyone that they are an advisor, by putting it in their LinkedIn profile, putting it on their resume, vitae, however they are promoting and talking about themselves. And then I try to come up with a suitable reward which may be a share of future profits. It may be convening everybody in a island resort somewhere where I pick up the tab and they get a few days of R&R for doing that. But if I can get 20 people to sign up and be advisors, one, I have demonstrated that I'm now dealing with challenge number one, lack of awareness. What I don't know may kill me, so I've now got 20 people who can tell me things I don't know to help me avoid that particular threat. But they also they serve as an endorsement of me. If you find any business out there with 20 advisors, you have to be impressed that 20 people would stand up and put their name alongside of the business and its leadership. And that gets to challenge number three, insufficient trust. And at the same time, this group of 20 may be possible investors in your company, but even if they're not, they have their own networks of people. So if you assume that every person knows 200 people and may be able to influence anywhere from 10 to 50 of those people to do something, having 20 advisors gains you an automatically much larger army in terms of networking and potential investor candidates, which is challenge number 10. So the easiest, quickest, lowest cost way to bolster your capital campaign is go put together a board of advisors that's as large as you can do it. Think through this strategically, not so much as this is somebody I know, but this is somebody who has a bucket of knowledge that could be helpful to me. I typically will provide for the advisor if they exceed their minimum required time commitment to my organization to become a consultant. So I'll sign two agreements at the same time. One's an advisor agreement, one's a consultancy agreement. That's an on-call by the hour type of an agreement. So if I need their particular help, we've already got the relationship in place and they're available to help out beyond their role as an advisor. And that's the least costly, easiest way to get started because you have strategically thought through what you know and don't know. You have reached out to people and offered them a mutually beneficial relationship in working with your group, and their presence alongside of yours associated with your brand and your funding campaign will speak loudly to people who will look at you and compare and contrast you with other people who are seeking their funding. Good question, Zach. Any other questions? To give you a little bit greater insight going forward into 2025, I right now am sharing knowledge through this successful funding show. I am publishing my newsletter Monday through Friday in a daily version. And then for those who prefer to read once a week, you can get a compilation of all the daily versions on Friday of each week. So those are two sources of free information from me. The more important one is CAP. As I've been working with Knowledge Avatars over the last 3 years, CAP is an AI avatar that's on my website. The QR code will take you to my website where you can see CAP. And CAP has been trained. It sits on top of a ChatGPT foundational platform, but it has been trained by me with a second set of information about how I see raising funding, which is more appropriate, more accurate than the generic information you'll get out of chat with regard to small business, small dollar raises, because they're different. They're not the consensus information. This is a subset or niche part of the capital industry, which has its own nuances that you need to understand in order to do things well. And I've trained all this into CAP. So CAP has transcripts of all my successful funding shows, all my newsletters, all the books and things I've written are all put into CAP. And you can go to CAP and ask CAP questions 24/7 every day of the year. So it's a quick, easy way to get inside my head and see what I think about a particular question. CAP can give you facts, can give you direction, but can't give you what you would call hard advice. You will reach a point where CAP is what CAP is. He's got some limitations, and that's usually where my consulting takes over. So the fourth thing that I offer to people is if you have a question about funding, I'll take a 15-minute call without charge. You can just send me an email at my address, kdakin@dakincapital.com, and we'll schedule time and see if I can answer your question for you. So have the question as precise and concise as you can make it so we get the most value out of that. After that, if those do not work, what I'm starting again this year is presenting a series of programs, educational programs. And the next one is in motion that will start on January 16th with a webinar. Now, interestingly enough, as I've come to use artificial intelligence and I'm looking to boost how it can help me do what I do, I'm creating a series of avatars on particular topics. And this one's on identification of investor candidates. And if you subscribe to this educational program, you'll get 1 year access to this dedicated avatar. You can attend the webinar, which will be on January 16th and which will be repeated quarterly throughout the year. And you will get a book on the topic of investor candidates, which will be in a digital format. And you'll get a half hour of consultation with me. And this new bundle of education, because it's dominated by the access, the value of the avatar, I'm calling an AVTOR, which is a term I've coined that's kind of like a mentor or a tutor, but because it's avatar based, I'm calling it an AVTOR. So your 1 year subscription to the avatar, get to attend the webinar, get a book, get some consultation, all for a single package. And viewers of this successful funding show can get a discount from the retail price. Discount price is $400. So if you're interested, go to my webpage and sign up. Look forward to having you attend the webinar, but more importantly, getting you in a knowledge stream where you have access on the topic of high probability investor candidates for you to access throughout the next year. So that is there. And then beyond that, I offer consulting services to people who need more one-on-one custom time where we need to dive into figuring out who you are, who loves you more than you love yourself, which is the way I describe my highest profile investor candidates. And how do you tell a story to them? How do you craft an offer to them that matches up with them, that amplifies the benefit to them, to try to remove any and all objections and obstacles to their providing you with the funding you need? This is what my consulting practice is about. I work with all kinds of funding and designing and continuing to work on new funding models where the common, traditional, ordinary approaches to funding are not working. So a little bit of creativity there may make all the difference. So with that, I appreciate everybody being in the audience today. Check one more time to see if we have any last minute questions. There is another one down here that snuck off the edge of my page. And Zach says, is there a source of traction that you think stands out more than others to potential investors? And I'm going to give you the obvious answer, which isn't really that valuable, but investors love highly successful, high growth businesses with high potential. If you're talking about angel investors, or we're talking about private equity firms, or if we're talking about venture capitalists, because in these cases, these people have a single metric, which is return on their investment, and they're trying to pick that horse in the horse race, which they think has the best chance of running fast, running hard, and winning the trophy. If you start shifting to other types of investors, which could be strategic investors, ones who are your suppliers, vendors, service providers to your organization, they want your company to grow, but they don't necessarily require high growth. They don't necessarily have to make a high rate of return. They simply want your business to grow so you buy more from their business. So they're looking at this differently. But again, they're looking for a company that is solid, stable, and growing. One that's matured or plateaued is not as attractive as one that still has upside potential. And so the ability to explain and demonstrate to people how you expect to grow year over year becomes a critical common element of every story. But that story has to explain how the investor benefits. Your growth is not the final income of the story. It's a chapter in the book leading to their success within their story. This is one of the things I recommend to anyone. When you're talking to an investor candidate, hopefully you're prepared, you know who they are, understand why they're there, why they may have interest. But if you talk about yourself and only about yourself, you're missing the whole reason for the conversation, because they don't want to know that you're going to be successful for yourself by yourself. They only care if your success somehow contributes to, advances, or helps their success. So when I talk with an investor candidate, I will ask them, about how I think I can help them. I will suggest different things that this client of mine can do, how that may contribute to what's going on. So if we're setting up a small business, I may go talk to the economic development office and say, this company looks like it's going to have 5, 10, 20 new jobs in your backyard. Is that going to be important to you in the scheme of things? And the answer is generally yes. And then from that point, go, what can you do to help them move forward? Can you give them some time? Can you give them advice? Can you do some introductions? If I go to an investor who's simply looking for a return on investment, the only thing I can tell them is that I have to make a higher rate of return than anyone else who's out there. And as I've explained on this show and with some guests, right now, if an investor is simply looking for rate of return, they would probably be better off investing in Bitcoin than almost any small business I know. Even though Bitcoin has a periodic setback and their value and pricing goes upside down every 4 years, and this next year apparently is the year when they're supposed to have an adjustment in their price point, it's hard to compete with someone who has an unnatural, purely speculative increase in price over time, which looks like a guaranteed home run to the person who's not studying and understanding investments and is interested only in a rate of return. If you are looking to increase your customer base and considering your customers as potential investors, then you need to start talking about how you can help them as a customer first, investor second, because they're a customer. So can you give them a discount on pricing if they invest? Can you give them free products? Can you give them preferential treatment? They get to go to the front of the line. all these different things that you could put together in a package that might be very attractive to your customers, which wouldn't be attractive to a person seeking a rate of return and may or may not contribute to the growth of your company, which could be strategically attractive to your suppliers and vendors. So if we're looking for a source of traction that stands out, one is be complete, be comprehensive, have your team as big as possible, because all these things contribute to looking like a solid company. Now, to stand out beyond that, you have to be able to do something no one else can do. If you're a startup, you can only claim you're going to do something new and different because you haven't done it yet. And making claims of future profits, being a unicorn someday, when everybody's making the same chant to the investors, it's very difficult for an investor to sort you out or assign to you a higher probability of success than everyone else who's making the same claim. So I typically will start with strategic investors, look to customer investors, and only after those are dealt with will I potentially consider people who are seeking only a return on investment, because it's a hard story to pitch in a highly competitive environment to people who may not understand what you're saying. They don't really have necessarily the skills or talent to look at you, assess you, and determine that you're the winner who should get their money over everyone else who's pitching. So last question of the day. Thank you for that, Zach. Thank you for everyone who was in the audience today. We're going to turn everyone loose. Hope you enjoyed this quick description of the overcoming the top 10 challenges to funding. And there'll be more information in my newsletter going forward on the educational program on this topic. Hopefully we'll see one of you or all of you in my webinar coming up next week. Take care, and we'll see you next week on Tuesday.